rates remain low around the world, and several big central banks continue to ease, but the direction of global monetary policy unmistakably towards tightening. Take a look at our map, courtesy of the Council on Foreign Relations. They have a nice global central bank monitoring, and it's a lot more red than it was before. A year ago, it would have been mostly light blue or blue, representing easing. Now there's a lot more red than we had. Argentina hiking rates this week by, count them, 500 basis points to 45%. Indonesia also hiked this month. The UK went up a quarter. That followed the Indians. And the Czechs, who, of course, all followed the Fed. In fact, there have been 10 central banks that have hiked since early June, including August, including Turkey, which went up 125 basis points to 17 3/4. In the previous 3 years, it's hard to find any tightenings at all, except for a quarter here and a quarter there. Ben Steele, Director of International Economics at the Council on Foreign Relations, says the world is in tightening mode for different reasons. In terms of the developing world, the Fed is having a significant impact on capital flows. Countries with the weakest economic indicators are the ones suffering the most. All this is combined to push CFR's index of global tightening and easing to a 10-year high of 3.85. Now, 10 is the maximum tightening, and minus 10 is full global easing. You can see there, September 2012, kind of full global easing, almost near 10.
Yeah, I was going to say that most in 10 years doesn't surprise me at all.
Right.
It should be.
Right, but that's, I mean,
we're talking about the 10-year anniversary of the financial crisis.
So that's really the point, Becky.
Yeah.
Let me, one more thing I just want to say, which is we have a way to go before we get into a massive tightening mode. That will have to include Europe. It's got to include Japan reversing course. But the change in direction is clear. And what you bring up is the really interesting question. How much to worry about?
I feel like we're still in the process of normalizing 10 years after. Like, we still have just tried to get back to a normal level of rates. I don't even know that we're there yet. I don't think we are by any stretch.
And I think, by the way, guys, I know I asked to have the map up, but do that index again, because I think there's the level of red that gets to normal, and then it goes back to the middle, right? So, so you have to go up to get to normal.
To get to it before you can ease off.
Right. And the question is, do they have to go into the deep red to get to normal, or can they stay at this modest pace? This index will go a lot more red when the ECB and Japan start to tighten.
Sure.
The way the index is calculated.
But is that waiting for Godot?
I think Europe next year.
Yeah.
I think they may. I don't want to have like maybe some horror sound effects. They may tighten a quarter.
Dun, dun, dun.
Dun, dun, dun. They may tighten a quarter next year, maybe. Yeah.